Good evening. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition, and this is for the 21st of April, Friday, 2023. You know, we got very quiet all of a sudden in the market. We've been in earnings season. This coming week, we're going to get another set of the mid-tier banks that come out. Some of the banks that have been in trouble, we'll see where they're at. You've had a pretty good pullback in the metal markets. Remember, we were just up to 20,035. We've given a pullback from there. The dollar, to me, is still acting like a market that is wobbling. Hasn't made up its mind, uptrend or downtrend, if you take a look at it, what it's doing right there. We're looking at the Australian dollar down pretty good today. And the yen, well, the yen is still acting to me on the bear camp. And as we take a look at bonds and notes for the day they were down, they're adding back yield as we're now getting into the quiet period of the Fed members. Today was the last day all of them could have talked, and that's over now. And now we wait. This week's nothing but May 3rd. We get the FOMC. There's about a 90% probability that they're going to go with a 25% rate hike. As for the June, nobody knows. Right now, if you go to the CME group, I think there's a 21% chance for that, but don't go by that. Nobody knows what the data is. This is going to be a data-dependent Fed. I know people don't want to hear that. They all want to talk, no, the Fed's going to have to turn down. All the talk we've had about how terrible earnings are, there's still overall an earnings beat. Now, I don't know how the season will end up. Overall, there's a beat. What else? We keep hearing how bad things are supposed to be. Are they? I don't know. Labor looks pretty good. I'm looking at what's happening in other countries. Service sector, just like in America, strong as can be. Manufacturing slipping, and that's where the jobs are being lost. We'll call manufacturing in the United States our tech sector. And that's where the jobs are being lost, but they're being picked up in other areas. Overall, we're seeing a gradual increase in continuing claims that I give you ground on, but the number's what, 240,000 or so? Come on, these are historic low numbers. So I don't know. I've got my doubts as to what people say. I've been on the other side of it for a long time. However, the people that are the naysayers have won in terms of they have kept the stock indices well elevated and they've taken the markets up, not down. So let's not knock them out of the ballpark here. They have been right financially. I think they're wrong the event, but that doesn't mean anything. When we look at the S&P 500, I've pointed this out to you and I'm going to say it again. All you've done on the bigger picture, and I don't trade off of a monthly chart in terms of, when I say I don't trade, I wouldn't tell my clients to trade off a monthly chart ever. But it's something good to look at. You're at a neutral zone. You're slightly over it by 9 points. Big deal. You're at a neutral zone. So you've had a long-term rally that has come back up and petered out right in that general area. Not the case on the weekly. For the weekly chart, we were flat. I don't consider 0.17% much of a decline, down 7 points, and you're just hanging here. You haven't been able to get up and over the 4,200 level on a close, but you've been hanging right there. You can see how the chart action is. Some people might say this is an inverted head and shoulder. Let me give you the example. I'm going to cross and hide that from you. Take a look over here. That's the head, a shoulder, and another one. So a shoulder here, a shoulder there, and the head. You'd pick this up and you'd flip it over. So if this market can start clearing the 4,300 level, I'm just using that from this last high, that is a chart pattern that's going to get some play, if it can do it. This can also be a saucer, where it comes down, up, and then it starts leaking again. That is why I really don't like chart patterns. I can almost make up names as I go along, and that's been the problem for them. To me, they're not reading tea leaves. I make fun of that because there's a real science to it, but it's hard to trade off of them. I like the numbers. I like quantitative so much better. And any way you look at it, you have a lower low, higher high. That is not a trend. You have a market that has rallied up to the resistance where it's failed before, the 100-week moving average of closes. That's a resistance point. So before we move on. You have a lower low, higher high. Where's the bias of the market? The bias is up as long as you're over the 18-week average of closes. That doesn't mean this is a go do anything. You've also had a vertical price rise. When the market got down here to 38.08 and a quarter, it's gone straight up about 400 points without so much as a week where you don't have a higher high and you haven't taken out a prior week's low. I call that a vertical rise. It's a natural progression, short covering, non-believers in the market, and that's why I say the naysayers have taken control at that point of the marketplace. Where do I think the market has huge resistance? Literally right where you're at. The 100-week average and the Bollinger Band, powerful tools, plus you're overbought. Now, for my money, make them keep going up and doing it, but I teach. This is exactly where I think the pros are taking money off the table, not adding it into the chart for the reason I've given you. Now, when we come to the Dow, your eye should go here, overbought. What defines overbought? Any reading over 70, the way that I read slow stochastics, is overbought. They embed when both numbers are going, here it is, one here. When both numbers are going, for example, sideways over 80 or sideways under 20. They don't embed a lot on weekly charts. They get overbought, oversold. They tend to do that more than anything else in the Dow. So we got to the Bollinger Band. What are the odds of staying under a Bollinger Band, the black dashed line, or above it? 5% of the time. So 95% of the time, if you're selling down there, the odds are against you. Why would you want to do that? Okay? I mean, that's what they build Vegas on. They're going to give you that 5% chance. And I know you're going to drop that coin in that machine. You will win the $1 million, right? How many of us have thrown the money away on that? And I still do. Somebody's going to win it at some point, but it's $1. It's not a big bet. There's a huge difference between playing the lottery, going to a slot machine, and doing it here. This is a sucker bet. There are sucker bets all over roulette. There are sucker bets all over. Get an 18 in blackjack. Are you going to draw? I mean, come on. These are the type of things you look at. So you don't do the wrong things and you don't play that. So let the other guy get the one time that he's going to win. It makes no sense. Maybe 5% of the time. Higher highs, lower lows. Now, here's something a little different in the NASDAQ. Let's talk this. Do you know what embedded means? Embedded means that the red and the blue lines are going sideways, and they're doing it over the 80 level, and they're doing it several weeks or more. So we have here week 1, 2, do you agree? Week 3 at the end today. That tells me that now the pros are going to start buying the break and throwing in the towel if the red line closes under 79. Now, there's a way to do it. I'm not going to explain that here. There's rules to it. When you embed, take my enhanced Bollinger Band course. It teaches you how to do that. Suffice to say, do I think there's serious time resistance at the Bollinger Band, which has already stopped this rally and the 100-day average? Absolutely. So even if you buy, I think you've got resistance right above you. In the Russell, no, you have an oversold market. See this? These numbers, both of them actually under 30. Oversold in a downtrend. Now this chart can get bullish. Let me give you the flip-flop. Get a settlement over 827.40, and then you'd have to be over 1843.60. Wherever that 18-week average comes in. Close over that, you'd suddenly have higher lows, higher highs. It's going to be difficult to do. What reignites the bear trend in the market? Well, because it's oversold, I can't have it reignite anything. What's the real pattern? Lower highs, but higher lows. Do you disagree with that? Look at where the V comes in. I don't see anything to yet do. In the bond market, as we were rallying up to the Bollinger Band, I told you 4 weeks ago, I said, I think the pros are taking money off the table. I have not changed my opinion. I think you're just caught in the sideways action in front of the June 3rd period. Could you start making bigger moves right in front of it? Of course you could not. Did I say June 3rd? May 3rd. FOMC meeting. That's what I meant to say. I don't see anything to do right here at all. I've got the same problem in the 10-year notes. Actually, you can get more bearish if you close under the 113 level, but you haven't done it yet. You're caught with the trend down, the bias up. And in the dollar index, you've been in a downtrend that is suddenly in oversold territory. Very dangerous to sell a market that's oversold, not embedded. Could it begin the embedded process this coming week? It could. If the market's down, both numbers will likely get under 30. That's week one. It takes time. I have told you I am committed on the bear side of the market on everything I'm seeing at this point to the short side of the dollar. Could I change? Like that. But right now, I'm not seeing reasons to change. I see the market is wanting to do that and continuing to do that play, which means I'm more committed to the long side of the euro because they're mirror images of each other, higher lows, higher highs. Would I ever tell you or my clients to buy into a Bollinger Band and on the first move over the 100-week average? You know better. So what have I done? I've taken my clients out of play in those markets. That's the logic. And I do this in the mornings. You get to see in the mornings if you join me. And by the way, if you're watching me on YouTube right now, two things. Please give me a thumbs up if you like what I do. These are free to you. And if you want to join me in the mornings, when I post immediately by 6 o'clock, typically it's posted a.m. Central Time, Monday through Friday, my update. Now you get to see what I'm seeing because I've already seen what's going on in Asia, Europe. Now I'm looking at America, the reports that are coming out like you just saw that I showed you. What do you do with them? What's the chart pattern look like? You got a join me button there. You can do it on our website as well. All right, but as you take a look, that overbought into this, I'll let the next guy want to own it. I have better things to do. You just had a reversal of an outside week up. Let me show you this. Here's an outside week up. You took out the low, the high, you closed higher on the Canadian dollar. Then, whoops, I so didn't want to do that. My mistake, I just hit the wrong button there. Got that? Now we take that out. Unless you go back through that high, this is a trap. The problem is you're right on that 18-week average. If the 18-week were under the market, I'd say that's where you're going. I don't know what to do with that. It's just an ugly chart picture. In the Japanese yen, you still have lower highs, lower lows. You managed 2 weeks in a row to be under the 18-week average. In my book, this is a bearish chart looking for the possibility of coming down here. Now, we have this, I think it's this coming week, the first central bank meeting with the new bank governor. I do not expect he will do anything at that. Generally, the first meeting is where, hello, how are you, the politeness, introducing the cabinet, everybody's telling the world what they're looking at, what they're seeing, and it's generally where you don't shake things up. Could I be wrong? Of course I could be wrong. I'm Mr. Swiss cheese. I got holes all over me. But the logic says that's what will happen. UBS is betting that sooner rather than later, we're going to get one of these meetings that comes up and they start preparing you for a change in policy. I'll wait for that change in policy to come about. Right now, I'm betting he does not make any change in policy, holds the line, and then he puts his own fingerprint, whatever that's going to be on the market. Nobody said he has to turn this market away from that easy money policy. In Bitcoin, you have the pattern of higher lows, higher highs, and you have danger big time. Why? Take a look at this reading. You closed at the low for the week. Unless you get a big up week, you're going to lose the embedded reading, and the odds favor you're going to go back down to the closest main moving average, which is 25,823. You need a big up week this week to stop that from happening. When I look at the differential between Brent and WTI, well, first off, people will say, why didn't crude keep going? Number one, what the Saudis did, they haven't lost on anything. The market was here when they made their announcement. Here. You gapped. You're filling the gap, but you haven't failed. They have held prices together. I keep reading reports. Oh, look at they're not doing this. They're not doing this. They haven't lost on anything. Now I'm supposed to be a fool and listen to President Biden's team that they're going to start buying in the fall strategic reserves. Well, I certainly hope they do, but fool me once, okay. Second time, it's my fault. I don't believe anything our administration says on an energy policy because I truly believe they don't even know what an energy policy is. To the person, and they're fire them all, period. Lower low, higher high, under the 18-day average, nothing there. You're probably going to challenge that right now here. You have the lower low, higher high. And again, look at right here and then the gap. And you can see that. I can even come back to it for you just to prove the point. Okay, we went home. This is where the market was. You gapped. You got a difference in there. So has anything really collapsed in this market in price since then? No. All you're doing is coming back to the event day, and often on charts you do fill gaps. Gasoline. In the bigger picture, nothing wrong with gasoline. The daily chart's a disaster, not the weekly. This is a pullback where the market got overbought. It's correcting the overbought. Let me use the word correcting. Present tense, happening. Both numbers have to get under 70 to no longer be overbought. I would say that the odds are like 85% that the 70 number is going to get under that by the end of the week. You'd have to go up very strong for that to be different, and that could happen. You fought the battle, and for 2 weeks you won it, and then it pulled back. I teach that the first challenge of a major moving average, 100, a 200-day, often ends up with the market pulling back from it. You hadn't been there since November. You finally challenged it at the beginning of the year, fell back under. Then we had this recent run-up, fell back. We had the last one, and you fell back. But it doesn't mean it's over. I believe Americans are going to drive. I realize the profit margins are not very big at the refineries right now. I see all that. But I'm a chartist, and at the end of the day, this is an uptrend with support at the 254.90 level, another 6 cents lower. Doesn't have to go there, but it still has support down there. So you put it together, you try to come up with game plans, and that's what I try to do with you. I try to sit there and give you ideas early in the morning, showing both daily charts and often a weekly chart, putting it together with trade recommendations, entry and exit points, why to enter there, approximate dollar risk on most trades, except for the ones that are what we call the enhanced Bollinger Band trade. Those are different completely, but otherwise you're trying to come up with those. I'll give you the new videos. I will put out special videos. I wanted to do one this week. I couldn't find a market that I wanted to do it on, and if I don't have anything to do it on, I just won't. I have the time. That's not the problem. Longer term trades like these are weekly charts, friends. We're talking of things to do on a weekly basis, not a daily. So how do you get it? Well, you can go to our website under the word research. That's where this is. What else can you do? You can click up here. There'll be an icon. If you're watching on YouTube, the word join is there. You can do it that way. So you got your part. It is not expensive. You're spending more on a Starbucks 2 times a week than my this subscription is going to cost you for the month. And you're going to get 24 videos, each 15 to 20 minutes long on average. I think you're getting a lot for those dollars. And unlike you getting rid of it from your body, you're probably going to learn something. I'm Ira Epstein. You have a great weekend. I will talk to you all come Monday. Take care.